Who controls your money? It's a simple question, but the answer is not so simple. When you hold a dollar, who made it? Who decided it was worth $1, not 10 or 1 cent? We use money every day. We work for it. We spend it. We save it. We worry about it. Who's truly in charge? Who's pulling the levers behind the curtain? What is money, really? Paper, metal coins? Not anymore. Numbers on a screen, a digital promise. It lets a farmer trade her crops for a doctor's care. A system of trust requires rules. Who makes those rules? The government? The banks? Someone else? The journey of money is a story of power and control. It begins with those who can create money from thin air. Government printing is only part of it. Real power often lies with quiet institutions in imposing buildings. So, let's talk about that central bank. What does it actually do? Its main job is to manage the country's money supply. That means it decides how much money should be flowing through the economy. One of its most powerful tools is setting the interest rate. What is an interest rate? It is the cost of borrowing money. Think of it like a price tag on a loan. When the central bank lowers this rate, it becomes cheaper for other banks to borrow money. And when it's cheaper for them, it becomes cheaper for you and me. Loans for cars. Houses become more affordable. But the central bank doesn't just print all the money. This is a common misunderstanding. The real magic, or maybe the real trick, happens with the other kind of bank. Commercial banks? The ones on every street corner. The ones where you have a checking account. They take our deposits. They keep our money safe. But they don't just let it sit there in a vault. That money doesn't sleep. The bank takes your savings and lends it out to someone else. This is how they make their profit, from the interest they charge on those loans. Now here is the most important part. When a commercial bank makes a loan, it doesn't just hand over cash that someone else deposited. It actually creates new money. Yes, you heard that right. When you get a loan for a house, the bank doesn't pull $1 million from its vault. Poof, new money has just been created. It exists as a debt, a promise. This is called fractional reserve banking, and it means most money in our world is created by private banks when they issue loans. Is this a good system, or is it a bad system? It has pros and cons. The good part, it allows the economy to grow. It lets people get loans to start businesses, buy homes, and invest in the future. It keeps money moving. The bad part, it puts enormous power into the hands of private banks. They decide who gets a loan and who doesn't. They profit from the creation of debt. And it creates risk. If too many people can't pay back their loans, the whole system can become very shaky very quickly. The first major player, the central bank. What is a central bank? Every country has one. United States, Federal Reserve. United Kingdom, Bank of England. It is the bank for other banks, the banker for the government. It does not serve you directly. You can't open a savings account there. Its job, look after the whole economy. Big job. But is it doing that job for everyone? That's the question. Let's look closer at loans and debt. A loan can be a wonderful tool. It can help you buy a home for your family years before you could save up all the cash. It can help you start a business that creates jobs for others. In this way, a loan is an investment in the future. The debt you take on is the price of that opportunity. The lender, the bank, gets to earn interest for taking the risk that you might not pay them back. It's a trade. You get something you need now, and they get a profit over time. This seems fair enough, doesn't it? But debt can also be a trap. It all depends on the terms. If the interest rate is very high, a small loan can quickly grow into a mountain of debt that feels impossible to climb. This is where we see the system begin to feel unfair. Think about credit cards. They are so easy to get, so easy to use, just a simple swipe. Buy now, worry later. But what happens when the bill comes? If you don't pay the full amount, the credit card company charges you a very high interest rate. This is how they make so much money. It's a business model built on people not being able to pay their balance in full. This can create a cycle of debt. You make a payment, but most of it just goes to paying off the interest, not the original amount you borrowed. So the debt barely shrinks. It can feel like you are running on a treadmill, working hard but going nowhere. Section 4, the winners and the losers. Is the system fair? In any system, there are winners and losers. In the game of money, who profits the most? It's often those who are closest to the creation of money. The big commercial banks and financial institutions. They can borrow money from the central bank at very low rates. Then they can lend that money out to us, mortgages, car loans, credit cards, at much higher rates. The difference between those two rates is their profit. And because they are creating new money when they lend, their ability to generate profits is immense. Is this fair? It's the way the system is built. What about risk? When you or I take a loan, we take on all the risk. If you can't pay your mortgage, you could lose your home. If you can't pay your car loan, the bank takes your car. But what happens when a giant bank takes too much risk and gets into trouble? In 2008, we saw what happened. Did they lose everything? No. The government and the central bank stepped in. They gave them trillions of dollars to keep them from failing. This was called a bailout. This led to the famous phrase, too big to fail. The idea was that if these giant banks collapsed, they'd take the global economy down, too. So, they had to be saved. But this raises a very serious question of fairness. If a family can't pay its bills, they can lose everything. But when the biggest players make catastrophic mistakes, they get rescued with public money. Is that a level playing field? It does not seem so. One set of rules for the powerful, another for everyone else. The system concentrates wealth and power at the top. This is the core of the problem. Become master of your money. Learn the rules. Get in the game. Claim the security you deserve. By tracing the patterns of the past, you'll learn how wealth is created and destroyed. Because while history doesn't repeat, it always rhymes. Welcome to the Financial Epoch. If you found value in this video, please subscribe.